So the advice that I'll give to especially new traders in the market is don't blame the system and don't blame glitches in your brokerage account for failed trades. So on Facebook, like I said, somebody reached out to me and he said he was very depressed because he's experienced huge losses. And he said two things. Number one, there were glitches in his brokerage account. Number two, he did not set the lot sizes properly. So what I understand is that he's clearly somebody who's a fresher in the market. Secondly, he's doing leverage trading. Thirdly, instead of taking the blame for improper processes, he is choosing to blame the system and the glitches because of which he's incurred loss. So you need to understand that when you're trading in the market, you are also competing with large institutional traders, and the active trading that institutional traders indulge in is backed by very advanced systems on which they spend millions of dollars for faster and more efficient execution. So if you think that the institutions are not fools, and there is a reason why they're spending so much money on ensuring efficiency and timely executions. So when you opt to do leverage trading, you are actually signing up for setbacks. And if you don't have a game plan to deal with these setbacks, this is what is going to happen. So this is also one of the main reasons why I advise all my members or all my clients to stay away from leverage trading. It's too much risk, and you only need something to go wrong, something that is not even in your control, to go wrong to wipe out your capital and your unrealized profits. When you're in any kind of business, you always want to skew the probability of success in your favor. And how you do that is by making sure that you're participating in good quality trades. You're participating there where the negotiations, where your margin is being secure. So why not bring that same mindset to swing trading as well? So coming back to our discussion, now that you understand that there is a certain workflow, and this is the 5-step process that I prefer to follow for swing trading. First, you identify the stocks that you can potentially create position in, then you monitor them. You enter the stock when it looks ready on the basis of technical analysis. Then you start trailing your stop loss, and once the stop loss gets hit, you exit the stock, letting the profits get realized in your portfolio. All in all, what you're doing is you're keeping your losses to the minimum. Now that you have this understanding, we will go to the first step, which is creating the watch list. Now, I have a very simple process of creating the watch list. This is my dashboard. Again, this same Excel sheet is also shared with all the members of the Advanced Technical Analysis Training Program. So we'll go here, and this is what I basically do. Very simple process, and this is just the first step, mind you. So what I want to do for swing trading, I want to keep those stocks in my watch list which have a lot of eyeballs on them. So in the stock market, or at least in the Indian stock market, the stocks which get a lot of attention from other traders are the stocks which are part of indices. So these are the 8 indices, or actually 9 indices, that I keep tabs on, and I refresh my watch list or just update my watch list every 3 months. So this is the December watch list that I'm creating with you, and I'm going to capture these 2 last datas with you. So what are the name of the indices? The Nifty 50, Nifty Next 50, the Nifty Mid Cap 150, Quality 50. So what this index does is it takes the top 150 mid cap stocks, and on the basis of quality, it creates a watch list, or it creates an index of the top 50 stocks on the basis of quality. So the links are all mentioned here, and on the basis of how the quality 50 stocks is decided is also mentioned in each of these links. Next is the small cap 50. So I also like to have some small cap stocks in my watch list so that there is an opportunity I can participate. I don't like to focus a lot on small cap stocks because small caps and micro caps are not a big part of my watch list, because I believe that there's a lot of uncertainty there, and even if everything is right technically, a big trade by one single party can really break the charts there. So for the purposes of my swing trading, I prefer to keep a very small portion. Barely 25% of my entire watch list is small cap stocks. So top 25 stocks from the Nifty small cap index. The next 5 indices that I like to follow are based on strategy. So for example, we have this one here, the strategy index of Nifty 50 value 20. Then Nifty 100 quality 30, same logic again. Nifty dividend 50, opportunity 50, growth sector 15, and the momentum 30 stocks. So out of the 200 top stocks in Nifty or in NSE, the 30 stocks on the basis of strong momentum. Again, there is a calculation that is done to identify these stocks. So these are the stocks that I like to capture. So in the interest of time, I have already downloaded the data and captured the information for all of the indices except for the last 2, because I wanted to show you how I do it. So let's go ahead and open the growth 15 index. And another thing that I want to show you is how I ensure efficiency. So This is the index list. This is the index page. So what I'll do is I always keep this book to another list of bookmarks, which is called Watchlist, because I keep coming back to this website repeatedly. I don't want to waste my time every time copy pasting the links also. So this is opened. Now I will download the file, and as you can see, I have a folder here, and every quarter I refresh this. So for the December 3, I will paste this. I know it is January, but I do this on a quarterly basis. So I've kept the month as December. I already did it in December. I'm redoing it to share this information with all of y'all. So now I don't care about any of this information. I'll just take this list, copy, come back to my dashboard. And I know you're seeing a lot of numbers, a lot of data here. The reason is simply because I have formulated this file already in such a way that all I need to do is copy and paste the data. So I copy the stock names, the index name, paste it. So we'll repeat this process again for the last one, that is the Momentum 30. Copy the link, paste it in browser, bookmarked, download, open the file, copy the names, go back to the dashboard, paste, copy, paste, copy the name of the index, paste the name of the index, and done. Now I'll just run this, and there it is. So now I have the list. So in this list, you will see cumulatively, I have around 318 stocks, but mind you, there are a lot of repetitions in this. Next, you will see that here in column C and column D, again, in the interest of efficiency, I like to make sure that the representation of the data is such that I can freely use that data across different tools that I use. For the purpose of efficient trading, I use tools like charting to run my screener. I use Google Sheets to maintain my trade tracker, and the Trading View to do my chart analysis. I create repeated watch lists. In Trading View, you can create watch list if you've mentioned the name of the stock and added a comma. What you can do is you can simply copy paste it. Here you will see I've already made all that data available. Here what I have done is basically created a pivot table. So what this pivot table does is it firstly gives me the name of the stocks in a unique manner. So out of the 318 stocks that I got from these different indices, there are 118 stocks. Now I basically have the list of 118 stocks that I will be focusing on for the purpose of swing trading in the next quarter. Of course, this is not the final list. I do another layer of due diligence on this to make sure that the stocks which are part of this watch list are fundamentally very strong. See, when you're doing swing trading, you have to make sure that there's a lot of liquidity and a lot of participation in those stocks. So choosing the stocks which are part of an existing index serves that purpose for you already. It reduces one additional task that you might need to perform. And when you depend on these strategy indices, it makes your job even easier. Then we have formulated all the name of these stocks in a very simple manner to make sure that for the screener, now I just need to copy paste this in a text file, import it into my screener that is charting. For my Google Sheet, I can simply copy and paste this entire list. And for my Trading View, again, just copy paste this list into my Trading View watch list, and I have a watch list. Again, I will go over this list quickly and check out to eliminate stocks where I know there are fundamental issues or issues with the company model or corporate governance. For example, Adani Enterprise, Vedanta, these stocks are going to get eliminated because I don't want to deal with stocks with this corporate governance issues. Like I said, if there is an opportunity for me to reduce one variable that is outside my control, I am going to do that. Corporate governance is something that I cannot control, but even if I've done very thorough analysis and determined entry and exit, if some corporate governance issue comes up in a stock, then that can really throw me off my game. I don't want to go through that scenario. So if I know that a company has corporate governance issue, I will eliminate that from my watch list day one itself. Now, coming back to this diagram, like I said, once my watch list is identified, I feed it to my screener. There are some settings done on the basis of momentum. On the basis of those settings, on a day where the market corrects significantly, I get a list of stocks that I need to start monitoring. I got the list of stocks which have been identified out of my, say, 200 watch list, my watch list of 200 stocks. So I will show you something else now. This is called the stock research dashboard. This is my stock research dashboard, and this is very clunky to see, but it is super simple. The watch list, the screener that I just told you about. So I'll just go to my watch list history and I will show you this file. So I call this the opportunity screener, and on the basis of the settings, momentum based, RSI based settings basically that are done. So this screener, for example, has identified all of these stocks in the last 7 days. Now, what I have done is in this stock research dashboard. What I've done is I simply paste all of that information here, and you can see this goes down all the way to 33,000 rows, because I've been doing this since 2023 January, and this has worked really well for me. Taking this data is not enough. I need to process this data and make it usable. So here the process begins of cleaning up the data, putting it into formats, running filters, sorting the, and then what happens is when for example, the date of 18th is written. How do I know which date I want to look at? Here there is a sorting filter which tells me that, okay, on the 30th of January, we got a record high, or rather actually on the 25th of January, we got 39 hits. What I want to do is on January, we got 59 hits. So this is the record date. So I want to know which were the stocks which got identified on 23rd January. So I paste 23rd January here. The moment I paste 23rd January, basically what happens is the moment I enter a date, filters out all the stocks which match my criteria. That is the stocks which basically got identified by my screener on the particular date. Now after that, I will create a watch list for all of those stocks here under the orange list. And as I move forward, each of these stocks, I will try to see whether they are worth monitoring for potential entry or not. On the basis of that, the stocks which don't look so strong on the daily or the 75-minute time frame, they get eliminated, the rest stay, and the process continues. Depending upon which section of the trend we are in, because we know that the stock market doesn't move in a straight line, it moves in waves. So last time when I asked my member to exit the stocks, we were here. We are not here anymore, of course. We are somewhere here, which I think is a good time to enter stocks, because we've seen some 1,000-point correction in the market, a little bit of recovery, and now the market is in a place where there's a lot of volatility and a lot of confusion, some choppiness, a little bit of unclarity, like lack of clarity is what I'd say. So if you look at the comment which I've posted about the market today, what I think is happening in the market is we had a mixed day where the first half saw sharp upside and the second half we saw some sideways activity. Right now, the range of 21,650 to 21,800 is acting as a bit of a resistance for the market, because every time the market approaches this range, it falls back down. This has already happened thrice in the last 2-3 weeks. However, even though momentum is not being very helpful for us to determine the next possible correction of the direction of the market, we do see that the volume indicator or volume analysis is giving us a pretty good indication. What I've noticed is since the 17th of January, strong volume on the upward price action has been noticed and weak volume activity on the downside price action has been noticed. This indicates that the broad uptrend will continue, and as such, we should continue to stay invested in the market for the short term and the long term and maintain stop loss on all our positions. So this is the Trade with Kavita channel. You're welcome to join this channel if you wish to access my daily market commentary. You can also search Trade with Kavita in Telegram. Just make sure you don't add any space and you enter the spellings properly. Also, mind you, there are some fake channels running with my name, and every day I search this channel, a new fake channel pops up. Make sure that you search Trade with Kavita and join the channel which has my introduction and around 2,315 members, because the other fake channels have way more members because they keep rotating names of the popular whatever growing channel is. So this is what I wanted to share with you about process of building a watch list. And let me also remind you that building the watch list is just the first step. You need to stay consistent. You need to go through the process of identification, monitoring, entering, trailing, and exit if you want to be consistently successful in the market. And I know this is a lot to unpack. If you want to learn more about that, again, join the Advanced Technical Analysis Trading program. I'm going to drop the link of the Advanced Technical Analysis Training program in my Telegram channel. So if you're joining now, the first link that you see is the Advanced Technical Analysis Training. Just search this link and you'll be able to go to my website where there's more information about the course. It's not a course, it's a live training. So every Sunday I take a live class for 2 hours. The whole purpose of coming up with this class was actually very selfish. I strongly believe that knowledge, when you share it more, it increases, not only in terms of the number of heads that now have the knowledge, but also your own perception or insight with respect to that knowledge. So what I've seen is that around 4 months back, when I started teaching this Advanced Technical Analysis Training classes, my own insights, my own depth of knowledge about technical analysis and swing trading started to get more refined at a pace that was much faster than I was able to do it previously, because now suddenly I was responsible for 40 other people who were depending on my own knowledge. And I feel incredibly proud when members of the training program reach out to me and they send screenshots of their own trading view, and it looks exactly like my own trade setup because we go through the step-by-step process of setting up the trading view the same way I am using. So Balaji is asking, do we have screener to run? So Balaji, the screener that I run on charting, I will just quickly give you a glimpse of it. It's called the opportunity screener, and this setting you can take a screenshot of it, but I also help the members of the training program make sure that they've set this screener up, and then I walk them through the entire process of deploying this screener. It's a very simple screener, basically just making sure that we are working on those stocks where the underlying trend is already bullish, that is indicated by the daily time frame, and then the 75-minute and the 15-minute time frame are giving us a buy on dip opportunity. I like to use a lot of watch lists for this purpose. Like I said, I will maintain a watch list of the stocks where I think something is brewing, but it's not yet time for me to make entries, because when I make entries, I like to make entries right at the bottom. So I'll give you an example, say Ambuja Cement. Let's see if this link can open up in time. It opened. So see, you see all these green dots. So all of these green dots is where I entered. So what I like to do is I like to keep the stock in my watch list. And so if I added, say, the stock somewhere here, so this is not where I will enter. I will wait for the stock to come to a level where I think it is best for me to enter. And then I will enter it to make sure that I capture a larger upside. A lot of people do breakout trading. So somebody who's doing breakout trading will enter here, and then sure, there's some upside, but my problem with breakout trading is that I feel the risk reward ratio gets a little skewed against me. I prefer to work with a larger risk reward ratio with a very small stop loss. So for that, I like to monitor my stocks and enter at very optimal prices. And that is the same basis through which I give recommendations to my members in the Trade Together program. Now, what is my Trade Together program? It's basically a swing trading recommendations, because I understand that doing so much analysis, creating watch lists, screeners, monitoring stocks and trailing stop loss, it's all too much knowledge and skill. So if somebody does not have the time to do all of that themselves, then you're most welcome to join my swing trading recommendations through the Trade Together program. And again, just like the advanced technical analysis training, the information about my Trade Together program is also made available to you in the Telegram channel itself. So you can just go to the Telegram channel links, and the Trade Together program is mentioned right here. For instance, the Trade Together program by Kavita Agrawal, you can see all the relevant links that you need to know more about the Trade Together program. So with this, I have shared everything that I wanted to share about Watchlist today. Now, before I leave, I will take some time to address your commentary. Today, I was very happy to see that even before the live session started, some of the members had already shared their stocks, because now that whenever I come live, I take some 10-15 minutes to answer your stock queries to the best of my abilities. So let's now turn to the comments and go to your portfolio, look for the biggest losers, tell me the stock name and the cost price, because trust me, that is where you need help. You don't need help with new stock names to enter, because the stock market business channels and WhatsApp groups and Facebook groups are absolutely filled with unasked advice about the stocks that you need to follow. So I want to actually help you where you need help the most. That is, I want to give you actionable advice on the biggest losers in your portfolio, because if you keep the losers under control, your portfolio's winners will automatically grow. But a lot of times we do the other way around. We keep the losers and we cut off the winners too soon, because we need that kick of just having booked some profit in the portfolio, which is very bad practice. So look at your portfolio, tell me the name of the biggest losers, tell me the cost price, and I will look at the charts and I will give you a proper stop loss level with actionable advice of whether you should continue to hold or add more to average your cost or exit the stock, because potentially there is not much upside left. Bhash, I cannot share the Excel link because you'll need training to use that. What I can offer you is you can join the advanced technical analysis training program. As part of that program, I do share the Excel file that I showed you for the watch list building, and I also train in that program how to build this watch list by yourself, because one time is not enough. You need to refresh this watch list every quarter, even though the indices don't change a lot, but it's important that you refresh it every quarter. So for that reason, the file that I've showed you will be shared in the advanced technical analysis training. Pradeep has asked a question, and NHBC is doing pretty well. So let's see whether you should hold or sell. So the underlying momentum is very strong, and from what I can see, the trend continues to remain strong. Today itself, the stock has gone up nearly 3%, which is fabulous. So given that the volume pickup is strong, momentum is strong, there's no reason for you to maintain a very tight stop loss. I would recommend that you set up a stop loss keeping in mind of this previous peak, because see, here when a big correction happened, how much did the stock fall? It fell around 10. So I'm guessing you wouldn't want to get out of a stock in case of a small correction like this. And the stock does have a tendency to take big corrections. So I would recommend you maintain a stop loss at the level of 81.5 for NH. It's very hard to give a target here because the stock is just moving like bonkers. So I will leave the target bit open. But yeah, once the stock moves up like 2-3%, you can ask me for a revised stop loss again in one of the next live sessions, or you can also join my Telegram channel and connect with me. Ma'am, SBI card, how to trade it? I don't like the stock SBI card. Let's open the chart. I don't think SBI card is a very good candidate to go long on right now, because I can see it is giving like really volatile movements with very high volume. So when a stock is falling and falling against very high volumes, it usually indicates that there's a pretty good chance the downside is going to continue. However, I also see a positive divergence on the 15-minute time frame, which is from a very short-term perspective positive. A bit of a positive divergence here, but again, the volume is not making me very comfortable. So I think this is mixed signals. So I would continue to ignore the stock for the time being, even though it is part of my watch list. See, at any point of time, even though I've showed you a watch list of 200 stocks, you need to understand that all 200 of those stocks are not good for trading. Some of the stocks are inactive or not suitable for long only swing trades. Here, this stock, VI card, is one of those stocks. So I had attempted an entry in the previous dip, but then I got out when the stock tested this 100 EMA line on the daily time frame and failed to move above it. And then I have deactivated the stock, which means if it even comes up in my screener, I am not making fresh positions here because the stock seems to be in a strong downtrend. So you see the stock actually went into downtrend in June 2019 and has been declining since then. What I would rather do is I would pick up a stock where there's a potential uptrend unfolding and continue to repeatedly play in those stocks. So I want stocks where I can see strength on the daily time frame, and then on the 15 and 75-minute time frame, I will continue to play swings in those. Worry. ITC, I am quite bullish on ITC 455. I think strong positive divergence on the 15-minute time frame. So this is the 200 EMA of the daily time frame, and ITC has come down to test that 200 EMA of the daily time frame. This has the potential to act as a strong support. So right now ITC on the basis of this EMA looks pretty strong. But then if you look at the volume of the last few days was not very good, in the sense that the prices declined, but the volumes increased, which means that ITC is taking a strong correction of this top. Also, historically, I've seen that the time of the budget is not very good for ITC. It tends to be very volatile during that. So you might want to avoid it for the time being, even though this 200 EMA is a good support. What the 200 EMA does is, because the underlying trend in ITC has been so strong, the 200 EMA can give it a small bounce. So you might be able to actually see a 2-3% upside here, but not a lot of upside. And for swing trading, we want to make sure that at least there is like 5-6% upside with a risk reward ratio of more than 3. So ITC does not meet that criteria right now. So UPL, in my opinion, is, see, I'm very bullish on the chemical sector, but UPL has been in a downward correction. And when this upside was unfolding, right, UPL was one of my favorite stocks for swing trading. But after having triggered few stop losses, I determined it's too risky to force swing trading here. The stock is right now also close to its 52 weeks low, and on the 75-minute time frame, it is starting to give some early signals of potential stability. So I wouldn't recommend you to exit immediately, but yes, if the stock breaches the 52-week low, then you should exit the stock, because then potentially the stock can fall further 15-16%. So your stop loss would be around 525 on this. And if the stock actually gives a bounce back here, then I would expect it to go maybe to 577. And once the stock is somewhere around that level, I think you should reach back to me and I can analyze for you and suggest whether you should exit at 577 or continue to hold if the price activity suggests more strength. So Deva says, I enter blindly after identifying stock, except stock run in first 15 minutes. So I think what you mean to say is you expect the stock to run in first 15 minutes. So it's not a very good strategy, Deva, because see, there's something called beginner's luck in the market. So this strategy might have worked for you once or twice, but this is not going to make you successful in the market. And what do we mean by being successful in the market? That we want to win consistently. This again does not mean that every single stock that we buy should end up in profit. It just means that the overall profit that we book in any particular period should be more than the loss that we book. So on that note, let me show you something. I want to show you my past performance and how I judge it. On the day-to-day basis, obviously, I can't win every single day, but I track my performance on a monthly basis. So for instance, here you will see what my portfolio impact has been on the basis of the weighted average allocation of my capital across different stocks. And I compare that with Nifty 50. So you can see here the performance. You can see the annualized alpha and you can see the outcome. For instance, in the month of January, I have slightly underperformed the market. Given the volatility, it's fine. In the month of December, my performance was 8.7% positive portfolio impact in the Trade Together program, and the benchmark was up 5%. So this was like very good performance. In the month of November, again, I underperformed slightly because the market was in correction. And then in the month of October, again, outstanding through the roof. So all of this is basically showing, if you see from November 22, this is almost 14 months. Out of these 14 months, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. Out of 14 months, 10 months I have outperformed. And if you look at the margin with which I have outperformed, that is also massive. So whenever I'm underperforming the market, my margin of underperformance is really small. And when I'm outperforming the market, my margin of outperformance is really big. This helps me be successful in the market on an ongoing basis. I also like to track something else, which is, let me show you this. This is my tracking sheet. It's very complicated and it's also a little scary. But without showing the name of the stocks, on a daily basis, I also like to capture how much I have performed. So today, on the basis of the different stocks that I hold, so some stock was up 7%, some was up 6%, 5%, some was up 4%, 3%, 2%, 1%. Today, my entire portfolio under management has grown by 1.7%. And if you look at the market was, I think, somewhere around 0.85% up. Now, obviously, every single day, I don't outperform the market and I don't expect myself to do that. But what I want is that when the market is in my favor, I want to be positioned in such a way that I am able to capture a bigger or I'm able to capture a much bigger move in the market. So again, this brings me back to the topic of today's session, the watch list. All of this begins with the watch list that I have created. Another one big reason why I choose to work with a very limited watch list and keep tabs on those stocks which have an underlying bull trend and only participate in those stocks is that in the market, you need to also be familiar with how the stocks move. Now, because UPL has been consistently part of my watch list, I know that the stock has a certain tendencies. And right now, the way the stock is unfolding in a bear trend, it's not a very good time for me to do swing trades. So I'm avoiding the stock. Even this avoidance is in my advantage. On the other hand, there are stocks in my portfolio which I haven't traded at all in the past 6 months. But now I know that they are coming out of a bear trend or a correction, and they are now getting prepped for a season of swing trading in them. So the idea is that for a stock which, say, in the bull trend or in the impulse wave, if you are aware of the Elliott wave theory, if it's moving, say, 100%, I want to enter exit in such a way that I make more than the primary trend of the stock. I have not reached that level yet, but I want to reach that level. So out of the 100 stocks in my watch list, 100 to 200 I maintain, right? Out of those, around 25% stocks will be very good for swing trading. Out of those 25% stocks, only in 15 stocks at the max I'm going to maintain an active position. So you see how there is a game plan, there is a structure. This is the structure that you also need. And if you don't have a time to formulate the structure, because see, for me, it took me 12 years to identify, build, and execute this structure. And every single day I improve this structure. If you think what I'm sharing with you makes sense, is logical, is something that you would also want to be in on, then the best way to do that is by joining my Trade Together program. Let's move on to another stock. We have a question from about Sharda Crop Chem, and he's bought it at 520. One more disclaimer that I want to give is that as much as I want to help you, a lot of the stocks that most members ask is usually not part of my watch list. So even though I am doing a quick analysis, this is not very thorough, but you can reach out to me for a proper portfolio cleanup where I will do a more thorough analysis and share better research with you. This is very high level and the probability of it being wrong is really high. So please take it with a pinch of salt because I make it look too easy. I do it really quickly, but this is not my best work. So with that, you bought the stock at 520. So the stock is quite down already. And what I can see is that the stock is facing very strong resistance from this 200 EMA and everything. Let's take a look at the weekly time frame. And I don't think this is a very good stock to keep in your portfolio. See, there is one support level right here, and this is where the stock also experienced a little bit of bounce. So even though the 200 EMA of the weekly time frame is right now breached, I want to give this stock the opportunity to respond to this support zone, because as you can see, the support zone goes all the way back to 2015 and it looks like a really strong support zone. So there's a good chance that the stock might respect it and bounce up. However, if the stock breaches the level of 367, then you should absolutely rip the band-aid off, get out of the stock, because the next possible support for the stock is like really low. Once the stock breaches like 337, it can fall quite significantly. You don't want to expose your capital to that much risk. So 365 is where you should maintain your stop loss on this stock. So for Pankaj, let's analyze Wedel. So you bought it at 405. Pankaj, I think now is a very good opportunity for you to exit the stock. I am not bullish on Wedel, and I think there are a lot of issues in this stock as well. So I wouldn't recommend you to continue to hold this. In case you feel skeptical about exiting right now, you can also trail your stop loss. The first trailing stop loss I'll recommend for you is at the level of 265. And if the stock breaches above the level of around here, say above the level of 200, then I want you to join the live session again and ask for a revised stop loss. How to check corporate issues with stock? I almost see all stocks have SEBI notices during bull run. Whom to filter a genuine issue and ignore regular SEBI notices? So Deva, with respect to corporate governance, SEBI notice is not necessarily a corporate governance issue. See, SEBI is the regulator. So if it suspects something is wrong, it's going to issue a notice. So that's fine. Don't pay a lot of attention to that. What you need to do for corporate governance is look at the news. Look for news of tax evasion, or if the top management has been called out by SEBI, if there are instances of intraday trading, or if there is possible manipulation of books. So for example, the Adani Group, they published the report that came out on it, the Heidenberg report. That is a big red flag. In Wedel, if you do a bit of due diligence, you'll learn that the stock price have been staying up because the company gives a lot of dividends, but on the performance side, it's not so much. Then again, you can use tools like screener.in. Just basically make sure that there is margin growth, there's revenue growth, there is no significant issues. There are a lot of platforms like Value Picker Forum where you can go search the name of the stock and just see if there is any issues that other analysts are talking about. So from a very high level, you can do this. And honestly, in the stock market at any point of time, there are very few stocks where you should actually have an active position. The safest way to operate in the stock market is honestly to associate with a research analyst, because for instance, me, right? I have 12 years of experience in the market. I'm registered with SEBI as a research analyst, and I have done CFA and CMT from US. In fact, I'm the youngest person in the world to finish all 3 levels of the CMT from US. So you need to work with somebody who has the right credentials, has the right experience, and talks about the stock market, or participates or does the analysis which aligns with your goals. So if you want to do swing trading in the market, but if you associate with a research analyst who's in private equity, then what is the point? Or who's only doing mutual funds, then what is the point? Or who's only giving long-term recommendations, then what is the point? So you need to find a lot of fit there. So Sahil says swing trading, from where we can get list of momentum stocks. Sahil, there is no list of momentum stocks because the momentum keeps changing. Sure, I'll share. So this is Watchlist outperformance. You saw that I have the list of 118 stocks, right? So here the list is a little bit longer because it's actually the old list. I didn't update it because it had more stocks. So what I do is when the market creates a new hit on my screen, or a new record hit, what this is doing, again, has a lot of calculations, and here I add the ranks. So what this tells me is, for instance, out of my watch list, who are the stocks, what is the ranking of the stocks since the 17th of Jan. So what this tells me is that IRB ranks number 1, which means that since the 17th of Jan, IRB has given the most outperformance. So if we go and look at the chart of IRB quickly, since the 17th of January here, the stock has basically gone up 56%. Now, obviously, I will not buy the stock right now because it's gone up so much, but this is a quant model, and this can help me determine where I want to look for opportunity. So for instance, if I go back to 18th of January, and if I just sort it, then I know on 18th of January, OFSS was number 1 in terms of rank compared to 17th January. Now, after so many days, OFSS is still at number 2, which means it has been going up, but probably not an opportunity for me to make a fresh entry. So let's take a look at Glaxo. Is Glaxo potentially looking good? Why? Because Glaxo was at number 13 back then, but then it fell to 88 and to 19 and then to 181, came up to 170, again came down, now is at rank 140. So what if Glaxo, which was at rank 13, what if it is looking potentially good for a buy on dip opportunity for me? So this is the kind of modeling that I spend a lot of time building and doing, and this is a constant work in progress. This is constantly evolving. Today I'm using this, tomorrow I might be using something else. It's like one step at a time, and a lot of times I spend a lot of time building these models, but then I discard them because I get another idea and it looks good. And see, this is what it means to be a research analyst, and the advantage of working with a research analyst. You don't have to do all this stuff. You have me to do all this stuff. So Glaxo, for instance, so I identified Glaxo back on 29 January because I saw it was a top performer and suddenly it came down. Then I saw that on the 15-minute time frame, it took support of the 200 EMA, potentially a good entry point. So fresh entry there. So that way, this ranking, it just gives me a lot of assistance, and this is how you can, on the basis of your own watch list, identify the stocks which have strong momentum in them. Just do a ranking. It's very simple to create on Watchlist. Again, very simple to create on Google Sheets. And again, in the Advanced Technical Analysis training program, this is something that I will be teaching the participants. We've not yet come on to the topic of this model. So if you want to learn how to build this model for yourself and how to use it, then again, the drill. Join my Telegram channel, click on the relevant link there. Pankaj has a good question. Indicators you usually apply to look at technical analysis, too many indicators really are confusing. Pankaj, you're absolutely right. And even though my charts look a little cluttered and it may give you the sense that a lot of indicators are applied, I actually use only 2 indicators. It's just different variations of the 2 indicators because I want to get a feel of the indicator on different levels. So I only use exponential moving average and RSI. And for the volume analysis, I, instead of looking at raw volumes, I prefer to use MACD with volume as the basis, and I compare 20 days average volume to 100 days average volume. So again, the details of all my indicators will also be shared in the Advanced Technical Analysis training program. My list of indicators is something that I've repeated so many times in my live sessions. If you feel I've shared valuable information with you before you leave, please give a thumbs up to this live session. It really helps take the video to more people who could benefit from the knowledge that I have shared here. And I will see you again in the next session of the Market Outlook series on Friday at same time, 5 p.m., where I will talk to you about Nifty, Bank Nifty, and we'll do a sectoral analysis to see where the momentum is headed so that we can put our capital there. I will see you on Friday at 5 p.m. Thank you so much for joining me. Namaste.